Alrighty, what's going on, guys? Welcome back to class number 2 in this price action course, and just exactly where we left us on the previous class. I'm going to continue giving you the explanation of uh, this strategy using simple price action, breakout, and retest. Uh, no indicators, literally using no indicators. You want to make it better or find an extra confluence? I'll show you later what you can do if you want to add, if you do like some kind of indicators. Okay, but I'm gonna leave that up to you. All right, but in this case we're going to continue. Okay, if you are watching this video for the first time, I recommend you watching the first one. I'm going to leave you the playlist here at the top right corner so you can go watch the first one, since this is part 2. All right, so just make sure to watch it. If you already watched the first part, then you should continue with this one. All right, now after showing you a couple of examples that you follow, right here in this example is something that you should not do. This is not what you're looking for. This is not what you want to see. Okay, understanding. Let me do it right here. Remember the first uh, trend that I give you an example of, right? It was something like this. We are trying to avoid this type of trends. Okay, we're going to try to avoid this type of trends. Why? Because you want the price to respect this high. You want the price to respect this previous high. You want the price to actually stop right here. If you're seeing the price is not stopping, you see a break, price sort of closing below or two, you have 2-3 candles to the bottom, then this support is being disrespected. So you want to kind of want to avoid this type of trend. Okay, you want to avoid it. So let's see what's happening right here. Okay, we have this support, this resistance right there. You see that the price is actually coming after the break. Okay, that's a nice break. I like that candle, right? That's a nice break of a structure. However, when price breaks, it pulls back. Look, it pulls a little bit deeper. It did pull a little deeper than we would like to, right? Why is it doing that? It's probably going for this order block right here. Okay. Remember, we're not trading a smart money concept. We're trading as a retail trader. This entire course is based on retail trader, is not SMC. Okay. So it's a different technique. So don't get confused. So you want to try to avoid this, even though price after getting into the zone, look at this big ass bullish engulfing, right? Price give you a big bullish engulfing. However, price got a little way too deep into my support. So that is making me uncomfortable to get into a buy. Okay. You can still take the trade if you want. You can still take the buy. I mean, it's up to you. I don't recommend it. I would let it go. You're going to have to place a stop loss below here. Take profit 1 to 2. Okay. It's up to you. But I would rather for you to let it go, because it's not respecting. Same thing happened here. Look at this impulse, right? Big impulse. What is it doing? Look, it's breaking this previous high. So that's another support that we have right here. Another resistance, I'm sorry. We have another resistance. After prices stopped right here, came back down, boom, broke it. It was supposed to be, this resistance was supposed to be protected or respected. Probably would expect the price to come here, test, and go, but did not do it. You see what it did? Hold on. Just trying to delete the line. Okay. So you see what it did? Price broke, but came back way too deep before actually pushing up. What happened? Well, probably there was a fair value gap. This is an imbalance right here, this candle, and this is an order block again, right? Again, we're not trying to trade SMC. So this trend right here was sort of an SMC trend. we want to avoid it. We don't want to take this type of trades. Remember, again, why not? Because this course that I'm doing right now is not based on SMC. It's based on normal retail trading. So you want the price to respect this support. You want the price to actually respect it. How do we know it's respecting it? Because you want to see the bullish engulfing candle happening right here, not here, deeper, right there, right? I hope it makes sense. I don't want to get you confused, guys, but I hope it makes sense what I'm trying to teach right here. Okay? Two different techniques. We want to avoid this. Okay? We want to avoid that. This trend, what's happening? Price created a little support, then broke. That's a nice zone. You see that break. See the break? Price actually tested twice. Look at this touch. When the price comes and touch it, do you see a bearish engulfing candle here to go to sell? No, right? Price pushes up, touch it one more time, and then you see that. You see that engulfing happening right there, right? So in this case, my short position would have been as soon as that candle closes right there. Stop loss a few pips above. You want to put it above the support line, that resistance line right there. It's also valid. It's up to you. You can put it just right there. You know, if you want to take the best out of this trade, you're going to do it right there. 1 to 2 or 1 to 3 risk to reward. Or now I'm going to introduce the Fibonacci. Okay. I'm going to show you here how you can uh, sort of measure, or let's say mark up your projection with your Fibonacci this way. You're going to use the Fibonacci retracement tool, and let's see, I have the setup here. There we go. So this is what you want to have. Let me open the settings right here. These are my settings. If you want to maybe pause the video right now, take a screenshot, and this is the setting that I have for the Fib. Okay. So what is that? Basically, how do we use it? If you want to mark up your target, you use the Fib. You open the Fib. You're going to go from the high of the bullish candle to the low of that bearish engulfing candle, like that. See, so you're actually measuring your target. So what's going to happen if your entry was right here, your stop loss, you can put it just a few pips above that bullish engulfing, that bearish engulfing, I'm sorry. And then you can aim for the 1 to, look right here, this is a 1 to 1, this would be a 1 to 2, this would be 1 to 3, or even 1 to 4, depending on where you want to put the stop. Okay, if you stretch it up a little bit, of course, it's going to reduce it. But you could be targeting any of those. Okay, I would recommend this low. Pay attention to this low, very important low. Once that candle breaks right there, probably at that point, you go on break even. Okay, remember all these little details that I'm giving you, because it's all part of the strategy and it's all part of the plan. Remember, when you are entering on a chart, whatever entry you're trying to make, you have to have a plan. Okay, you have to know where the stop loss is, where your take profit is. You know, it's very, very important to always have a plan. So I hope it makes sense. This was a nice trend breakout. Okay, price was actually creating a little support. We have a break, retest, entering on the retest, boom, right? Right here. In this bullish example, we have, again, another resistance right here, right? Very strong resistance. You can see the price touched multiple times, about 4 times right there, before that one candle break. You see one single candle broke right there. That's a nice break. Look at what happened. Price sort of pulled back right here, then another pullback, bullish engulfing, pullback, bullish engulfing, and then much deeper pullback, finally retesting the zone, and then bullish engulfing right there. Boom, giving you the entry. Okay, now watch out if you're trying to enter a little too early, because you can get in trouble as well. If you wanted to get in here thinking that the price was already retesting, you know, where the stop loss is going to be, maybe you can put it a few below the support, right? But this would have been a very early entry. You want to see the price actually touching the zone. getting into your zone. At least one of these candles right there, the price wants to get deep. You see, this was the only candle. So you want to measure your target. You use the Fibonacci from the low of that bearish candle to the high of this candle, including the week. You got to include the week. Okay? Right there. Basically, it's to measure. You can put it on the right side so it's not going to get in your way. So that's kind of like where your target is going to be. Where you can target as soon as the candle closes, that's your entry. Stop, few pips below. So take profit, you can go for that 1 to 1, 1 to 2, 1 to 3, right? If you have maybe an old high or maybe a resistance or some other highs, recent highs that you want to target, you can target that too as well. But this is sort of the best way right now to do it. You're going to have to choose. You can have a fixed target, like normally like a 1 to 2, maximum 1 to 3 risk to reward. If you want to go higher, man, it's up to you. Rule number one should be here. If you're up, like if you see price actually breaking a previous high, most recent high, after your bullish engulfing, boom, breaking a previous high, man, you should be taking partial profits, maybe even putting stops to break even. Okay, you gotta have a plan. You gotta have that plan. So let's see. Now, this type of trend, again, we're going into the same. I'm trying to show you examples where you can take the best examples you can take and the worst examples you have to avoid. So anyways, look at what happening right here. When the price creates these highs, price never comes back. It never comes back to retest, right? The zone. However, price, it did continue pushing up. Price pulled back and then pushed up. Now, you want to get in here. Do you see a bullish engulfing? There's no bullish engulfing candle here. No. Maybe this is another candle pattern. These 3 candles right here, 3 candle reversal. That's another candle pattern. I don't want you to pay attention to it. I want you to ignore it. That's nothing. I am looking only for a bullish engulfing. Okay? So what happens after that? We have an impulse. Price is breaking a previous high again. So we have another little resistance right here. Right? So price breaks, and I'm expecting price to pull back, respect the zone, and go, right? With a bullish engulfing candle right here if I want to buy. But look at what happens. Price disrespect that, so it goes lower and got a little choppy right here and then pushes up again, breaking another high. So this is a type of trend where probably I don't know, it was Asian session, but it wasn't the best. It was not the best. Okay, so I'm showing you the examples that you have to avoid. It broke right there, then it sort of broke this one as well, but look at the move. It's very, very slow. That break, it came deeper, then pushed up again. Here is giving you a bullish engulfing, yeah, but look at the behavior right here, right? It's not clean. It's not clean. This was clean, but price never came to the zone and showed you a bullish engulfing to go buy. Sadly, that's it. You let it go. This is a very, pretty bad trend. Price was pushing up. Yes, it was definitely bullish, but it was a bad trend. Probably it would have worked for SMC traders because this was a fair value gap right here. Again, I'm just showing you another example for SMC, but we're not trading SMC. We're trading. This course is based on just normal retail trading. So I hope it makes sense, guys, what's happening right now. This was an imbalance. Price reacted to the imbalance and then continued pushing up. So this trend, no, avoid it. Okay. Let's see. Right here, trade after a consolidation breakout. This also, I like it, okay, a lot. Because you can see price was consolidating until finally it popped, right? Look at the break, strong candle again. Just look at the examples, guys. You're gonna have to maybe rewatch this video a couple of times to see and understand the examples that I'm showing you right here. Okay. Every example that I'm showing you has to be clean, and it's clean. You got to have either one or two candles, breaking very strong to the upside. Okay, and then you wait for the price to retest, right? And then look at that bullish engulfing candle. Okay, where was the entry? As soon as the candle closed, where's the stop loss? Normally below this low, right? Let's use the Fibonacci. We're going to use the Fibonacci from the low, which is this low, to the high of the engulfing. So from this low to this high, right? And we can target, either 1 to 2, 1 to 3 risk to reward, whatever, right there, right? Probably, I don't know, this trade. Let's see if we would have got us on break even. Probably price was pushing up. Yeah, I think this one would have got us on break even. After price was very choppy right here, pulled back, probably halfway. You see, we were halfway up already, taking partial profits, moving stops to break even. Price comes back down, get us out, and then pushes up. So you see, so this is also going to happen, right? It's inevitable. It is going to happen. Stop loss is going to happen. Stops on break even are going to happen. But if you have your plan, is the best. But the best we can do. Hey, follow. You're gonna have less losses. So right here in this example, what do we have? Again, this is a consolidation that you need to avoid. Now, what happened? Look at that. We have a resistance right here. We have a support right here. Pay attention to the break. This is what I mean. Break was clean, was bad, was this pushback inside into the range? No. This is a complete no. So nothing. What are you expecting after a clean break like that? You want this support to be respected. So you want the price to come back, retest, and show you a bearish engulfing candle right here, right? Not right here. Price got deeper, got way too deep, and then it did show a bearish engulfing candle right there, though. Even though it did show you that it did drop, but it's not what I like. It's not part of my plan. So I'm not taking it. You know, you have to stick to the plan. You have a consolidation. You got to break. Price looks like it's pushing back up inside into the range, but then okay, it shows you probably sweeping this high, and then it shows you a very strong momentum to the downside. Okay, that huge bearish engulfing candle would have been a nice entry, but it's not part of the plan. Well, what I was looking for and what I was waiting for is for price to come back right here, stop right there, show me a bearish engulfing, and I can sell. That's what I wanted to see. So I hope it makes sense, guys. I hope I'm not getting you confused. I am trying to explain right here what you should be doing, what all of us should be doing, and it's respecting the plan. If you have a plan, respect it. So I hope it makes sense. This is actually part 2 of this free course on price action. Let me go ahead and stop it right here, and I will be posting the next class uh, in the next day. So I hope it makes sense. If you are watching this for the first time, as I mentioned, make sure to watch the first video. This is part 2, and let's get it. I'll see you in class number 3.